Hello everyone, welcome to another video of Decoding IPOs series by Finance and Investment Cell of Kirori College. Today we'll be going to look at Laxmi India Finance Limited IPO. So Laxmi India Finance Limited operates as non-banking financial company. The company is involved in providing various lending products including MSME loans, vehicle loans and construction loans. The company supports small businesses and entrepreneurs. It was established in 1996 as an NBFC and their primary goal is on serving the financial needs of underserved customers and MSMEs. So now we're going to look at some important dates for this IPO. The opening date is July 29, 2025, while closing date is 31 July 2025, while allotment is 1st August 2025. So we'll be going to look at some important details for this IPO. First one is face value. So the face value is 5 rupee per share. Issue price band is 150 to 158 per share. Lot size is around 94 shares and the total issue is aggregating up to 254.26 crores. It is offered for sale. The objective of listing this IPO is this IPO proposes to utilize the net proceedings from the issue toward the following objects, which is to meet the future capital required toward onward lending. Uh, the expected amount will be 143 crores. So now we'll be looking at company's financials. Let's start with the revenue. So revenue has showed an increase of 1.72%, and now assets. So assets has also shown an increase of 43.43%. PAT, which is profit after tax, is shown an increase. It was 22.47 in 2024, while in 2025 it was 36.0%. The increased percentage sum up to 60.26%. EBITDA has also increased, total borrowings has also increased, which is not a very good sign. If we talk about key performance indicators, so market capitalization of Lakshmi India Finance IPO is 825.83 crores. First is debt to equity ratio. So 4.42 is the value for this for a non-banking financial company in India. Debt to equity ratio of 4.42 is generally considered in acceptable range. However, the financial services sector, especially lending institution like NBFC and banks, typically operates with significantly higher debt to equity ratio compared to other industries because their core business involves leveraging borrowed funds to provide loans. Now we'll be comparing our Lakshmi India Finance IPO with its peer companies. So first one is Mass Finance Limited. EPS is, which is earning per share, is 17.48, while Five Star Business Finance Limited is 36.61. SBFC Finance Limited is 3.21, which is very low. Then Agro Capital Limited is 15.68 average. CSL Finance Limited is 31.64, which is generally considered to be high in this table. AKME Fintrade is 8.28, while Moneybucks Finance Limited is 0.39, which is comparatively very low from its peers. Now we will be looking at the comparative analysis with listed peers. As we can see, the average PE ratio of this industry is 81.68. The highest PE ratio is 6.67. Lowest is 0.94 and average is 81.68. If we talk about in simpler words, P ratio of this IPO is 17.99, compared with industry average of 81.68. It indicates undervaluation on PE basis only. The price of the share seems fully priced for the investment when considered based on the average PE ratio of the industry. Now, the GMP of this IPO is the last GMP is rupees 3, which was updated on July 30th, and the price band is 158. Estimated listing price is 161, which is cap plus today's GMP. The expected percentage of gain and loss is 1.90% on this. So IPO strength, as we can see, it targets MSME funding, affordable capital and diversified funding sources, risk analysis and management framework of comprehensive credit evaluation and underwriting. It has increased penetration into the rural and SEM regions. Now we'll be looking at some weaknesses, which is not very much. Since it increased the chances of borrower default if the entire industry faces a downturn, then the other two are not very significant, but sustains a negative operating cash flows, increased long-term liquidity risk, resulting in prolonged difficulty managing daily cash outflows. So the conclusion that can be derived from this decoding is that this IPO emphasizes MSME lendings and its servicing of rural markets. It expanding competitive P values adds to its appeal. However, it also has some risk related to MSME concentration, which is negative cash flows, and if investors have to put money in this IPO, they really need to analyze the positives and negatives in detail. For today, and thank you for watching this video.